Hello and welcome to the one-stop shop where you can rub shoulders with an extraordinary group of men. India's tryst with its economic destiny began with these bulls taking charge of Dalal Street. Learn the incidents and the inspirations that helped shape them. Join me, Ramesh Damani, as we morph into the minds of the wizards of Dalal Street.
I believe India is a runner without shoes. We have no infrastructure, we have a stifling bureaucracy, a lot of corruption. In spite of that, we are where we are.
Well, thank you so much for joining me on the Wizards of Dalal Street.
My pleasure, Rameshji. It's a privilege.
There are a few characteristics which we look when we make investments. First is management.
Really?
It's entrepreneur.
In equities, if you ask me, there are three things which matter, whether there's fear, how's the valuation, and third is what is the flows.
I would say technically, we are in an absolute bull market. We are in what is going in the start of a bull market.
Wow, what an endearing walk down memory lane. Welcome to a special show with a man who needs no introduction, market maven Ramesh Damani, who's joining us today as a precursor to the launch of his highly successful 2-decade-long series, Wizards of the Street. Ramesh, I just noticed, in the last 17 years, the weight has been shared, the mustache has been shared. What else?
And I've lost a lot of hair. No question about
Created
that.
a lot of wealth as well, right?
I hope so. It's been a nice journey.
Yeah.
Thanks, Nimesh.
Absolutely. 17 years, right? So how has the personal journey been for you from the first show to now?
Well, it's been extraordinary. Just to take you back a minute, I joined the markets in 1989. And imagine if you went to America, say, and your three people who live three neighborhoods down from you were Warren Buffett, Charlie Munger, and Peter Lynch. What a great time you would have learning from these masters. And I was so extraordinarily lucky that when I came, among the first three people I met in the markets were Chandrakant Sampath, who taught me compounding, R.K. Damani, who taught me not about valuations, the kind you need in the stock market, but about values, how should you lead your life. And of course, Rakesh, who taught me how to bet fearlessly, how to have conviction in the trades you got. So I was extraordinarily lucky when I came to the market that these were among my first few best friends. Then they introduced me to a wider circle of friends, Durgesh Shah, Inam, Vinod Sethi, and so on and so forth, all of which have been so extraordinarily privileged and lucky to introduce on the airwaves, along with some great international voices. When we first started talking to them, they were not known to India. Mark Faber, Jim Rogers, Michael Steinhardt, Ken Fisher recently, all have had extraordinary careers on Dalal Street or Wall Street. And it was truly my honor and privilege to bring them towards the Indian audience, their investment styles, their hopes, their ambitions for the first time. So thank you for an extraordinary privilege.
But Ramesh, this is something which we're going to discuss in the second segment as well, as to which are the new names that you're going to feature in the upcoming series. But looking at your own journey, we all know that you moved from Wall Street to Dalal Street. But not many people know that even you as a young investor then, you've lost money. Your dad gave you some $10,000 and you lost that out, right? And that was the first learning experience for you. So, walk us through that lane of being from Wall Street to Dalal Street.
Well, Nimesh, as I mentioned, it's very important to have good mentors in life. Yeah. And when I came, the index was 600. Today it's closer to 60,000. So it's been an extraordinary journey. If you stayed invested, you made a lot of money in India. And I learned, like I told you, from the feet of the masters. I learned from the names I mentioned to you. And Chandrakant Sampath, for example, taught me compounding. So he taught me how to hold long and remain invested. I think what distinguished my generation of investors from some other generations was that before Dalal Street was a cesspool, a backwaters, if you will. These new generation of people, Nimesh, RK, Rakesh, believed that you could buy good businesses and with India's prosperity they would grow. And I kind of latched onto them a bit later on. But I realized that was the way to create true wealth in the stock market. So I think till maybe 92s or something, I was also a broker on the Bombay Stock Exchange. So I tried to make money doing brokerage back and forth. And then luckily for me, Infosys went public. And because of my tech background in America, I kind of understood the value proposition they have offered. And even, you know the rest of the story, even if we bought a few thousand shares of Infosys, they went up 1,000x over the next 10 years or so. So they gave us an extraordinary amount of wealth and privilege. And we're truly grateful to Narayan Murthy and Nandan Nilenkani and all us. So it's been a very good journey. I mean, anyone who believed in India, anyone who remained invested, did extraordinarily well. And if you did a bit of stock selection along the way, got into a bit of tech at the right time, got into a bit of FMCG at the right time.
Consumption at the right time.
I think you've done really well.
Yeah.
And the good part, Ramesh, I'm sure you'll be here, that I think the next 30 years promise to be more exciting than the last 30. And last 30 have been very exciting.
I don't know what can be more exciting than sharing perhaps the same backyard with people like Warren Buffett, Charlie Munger, at least being in their presence, right? I mean,
I know.
If the next 30 are going to look even better, then I'm waiting for it. But you were talking about Infosys, and that was one of your big picks way back in time, original picks. You've had several others, whether it's United Spirits, some other mid-cap IT companies. What has your biggest learning been from the stocks that you chose?
Yeah, I think the key is, for me, has always been, to find value. I mean, you want to, it's like your mother taught you to shop, ki rupi ki cheez athane mein kharidni chahiye. And that's the same true in the stock market. You want to buy cheap. Now, fashions come and go. Sometimes it's eyeballs, sometimes it's replacement cost, whatever. But you buy good businesses and you're willing to hold them for the long time, I think you'll do extraordinarily well. And what these gentlemen taught me is that unless you risk running very far, you don't know how far you can run. And the trick for me has always been to push myself to buy bigger positions, to, there's a saying on Wall Street that bulls make money, bears make money, but pigs get slaughtered. But that's not quite true, because sometimes you need to be a pig in the market. When the conviction is the highest, when the trade is at the best point, you need to bet big, and then you need to know how much you make. You cannot really get really rich on Wall Street or Dalal Street by buying 10,000 shares or 25,000 shares. Occasionally the market flashes a neon red light to you, and with your experience you should be able to pick it out. And I think that's been the biggest learning, that you learn how to compound your money, and you learn that when the iron is hot you have to strike it and then go in for the kill and back up the truck, as I say, to buy it.
Ramesh, I know buying value stocks at a cheaper rate also sometimes is a trap, right? And you learned this hard way through MTNL. I guess your top three losers would be MTNL, MTNL, and MTNL, right? So, tell us that experience as well, because that is something which investors should learn, to know where to cut your losses, how to not make the mistakes again. So, what has been MTNL learning for you?
Nimesh, I'd rather get a root canal than talk about MTNL, but since you asked, I will tell you that.
We can learn from your mistakes.
Yeah, I hope someone does. It was, you're going to lose money in the market. I mean, that's, the nature of the business. You're going to get a few things wrong. And in my case, it's centered around MTNL. Ramdev often talks about value migration. And there was a clear value migrating to private telecom players, which we didn't understand. It just seemed cheap. And so you kept buying it and buying it. But to come back to the learnings you talk about, Nimesh, maybe you lost 90% of your money in MTNL, which I probably did. But sometimes you make 10 times, 20 times your money in the winners. So what Peter Lynch taught us is so true, that you water your flowers and cut your weeds. So maybe I didn't sell MTNL at the right time, but still the loss was something I could manage, because the profits from the good stocks so much outweighed the loss. It did teach me one thing, is to remain diversified and not to go whole hog on a particular stock. But that's an art form that, I think I'm still learning. I'm still trying to, bet on a smaller basket of stocks. It's a hard task, but, I'm still young, what the hell.
Let's flip it, let's brighten up the mood by talking about things that worked for you, perhaps.
And maybe it's going to work in the future as well. So
I remember on the Diwali show is when Ramesh spoke about defense PSUs. Rail PSUs, and they've done extremely well. But when do you decide is the right time to exit? Because these are PSUs at the end of the day. They haven't really created wealth if you look at it over the last 2 decades.
That's a misnomer, Sonia, and a lot of people say that. I mean, for example, just when I started the Wizard show for the first time, I used to buy Bharat Electronics. It was a 20 rupee stock with a 2 rupee dividend built in, 160 crore market cap. It's 60,000 crores today. And I think it can go perhaps double from these prices too. So, I mean, it's created long-term wealth. The mistake people make often is to bunch FMCG stocks versus all PSU stocks. These are all in disparate companies. There are some commodity stocks, there's some power stocks, and some defense stocks. So you need to learn how to pick the sector in the PSU that you're bullish on. I think the mistake a lot of analysts make is lumping them all together. So obviously you're going to come out with disappointing results. What if I bunched Himachal and Global and all those bad consumer stocks along with the levers and the Dowers of the world? Your returns won't be that great. So I think that's a trap that a lot of people fall into. And these are good stocks, these are great businesses. The government, if you hear the Prime Minister speak or the Railway Minister speak, they're going to use the railway and the railway budget as a blunt axe for capital expansion. They're just going whole hog on these places. They're going whole hog on defense. I mean, for example, let me give you an example on defense and why it matters to India. The US produces 150 million artillery shells in a year. That's what Ukraine uses in a couple of weeks. So there's a huge shortage of defense equipment, and here these companies are already producing equipment and threatening to do more so by Atmanirbhar Bharat going more domestic source. So there's a great opportunity. They have good order books, they have excellent technological skills, and we are buying them literally, as I said, Rupi ki cheez chavanni mein, not even athandi mein. So we're very confident about the play out in these sectors. So I mean, there is a time to sell, I'm sure, but I don't see that yet.
Okay. Ramesh, you spoke about defense PSUs, you spoke about real PSUs, but the other one sector which has been very close to your heart is the consumption theme. You've always bet on large consumption themes. United Spirits was one of your top pick way back. Looking at a change which is happening in India with so much of young urban consumption going on, anything that excites you in this new journey, the fintech companies or the new platform companies, anything that stands out for you?
It's a good question. A lot of what's happening in India excites me, and the reason for that is by just a freak of coincidence. We're at the right place at the right time. It used to be the world was divided, that China would produce everything and America would buy everything. Both got rich doing that. China would recycle its money into the US Treasury bills. Inflation remained low, interest rates remained low. A similar meme played out in Russia and Europe, where Russia gave gas, $20 billion of gas, which was free for them. Germany created $2 trillion of economic output for that. Now the world has changed. I mean, China, we used to call the so-called BRICS countries, which you all familiar with, and we now call them the TRICS countries, which is the enemy of my enemy is my enemy. So what they've taken is Turkey, Russia, Iran, China, and North Korea have formed a new bloc. So the world is changing. They need what they call not China plus one, but nearshoring, friendshoring, offshoring. I think that just plays into India's strengths, because suppose you want to set up a digital project. You need 5,000 programmers. There are very few countries in the world that can give you 5,000 programmers on standby, chemical engineers, physicians on standby. India does that. So we are at the right place at the right time. We have political stability in our country, and we have a government that is keen to foster this kind of growth. So I'm very hopeful that there'll be multiple sectors that will do well over the next few years.
Okay, I'm very interested to know about the multiple wizards of Dalal Street that we're going to see over the next 10 to 20 years. So we'll do one thing, we'll take a short commercial break on the show. We'll be back with Wizards of the Street. Don't go anywhere.